Hello, welcome to Theresa's Real Estate Review. I'm Theresa Santacandro with ERA Key Realty Services, and I'd like to welcome you to my first show of 2015. I hope you all enjoyed the holidays. I'm happy to have with me today my first guest, Amy Tomiolo of Drew Mortgage in Shrewsbury, and Amy is a senior loan officer with Drew Mortgage. So thanks for joining me today, Amy.
Thank you for having me today.
So I'd like to start off the show by having Amy tell our viewers a little information about yourself and how you got into the mortgage business.
I have been in the mortgage business for almost 15 years, and my previous experience was always in the financial sector in sales. So it was an easy transition 15 years ago to go into mortgages, and I was fortunate enough to join a company that was very, very beneficial to me in my career was Drew Mortgage, which I'm still with. And Drew Mortgage is a company that's been in business for 25 years. They're an established, licensed lender that we have right now. I think there's 16 national lenders, the banks that we work with. And the big advantage of working with me at Drew Mortgage is we have in-house underwriters and processors, and we underwrite directly for all your conforming loans for that's Fannie Mae, Freddie Mac, and we have for FHA and VA.
Excellent.
Thank you.
And do you portfolio your loans there?
We don't. We do have an outlet to portfolio loans. We do have that outlet, especially for loans that they fall out of the box. We do not keep loans in-house and service loans. We're working towards that someday, but right now we're not in that category. But we do have an outlet for that type of product for people that have good credit and they just fall out of that box that Fannie Mae or Freddie Mac will not take. So we do have that. We're fortunate to have that outlet. Most companies do not.
Okay. And I also wanted to, as you know, that we're entering our prime spring market right now, where many viewers may be either sellers or buyers ready to enter our market. And so I have a few questions that I'd like to just review with you that your answers will be benefiting both the sellers and the buyers out there that are looking forward to coming on. So the first question we have today for you is, what is happening with rates, and do you think they will go up this coming year?
Rates right now are excellent. Excellent. They're at I shouldn't say exactly at an all-time low. Rates were probably an eighth to a quarter less than what we are right now, approximately a number of years ago. Okay. But we're at that all-time low. We're in the higher threes on a 30-year fixed.
Higher threes. Okay, that's excellent.
It is excellent. It is the time to buy. And I always say to people that if you're thinking about it, now is the time, especially this spring, for the purchase market and even to refinance.
Yes.
To refinance with these rates are low. And the good thing that's happening in the industry is that rules and regulations have been so strict for a long time. They're loosening up a little bit. So new programs have come into existence now, and with these rates being so low, and if you are afraid to do anything before, please give me a call. We'll see if we can do something for you today.
And that's a great point. And I also want to mention that, many sellers are asking me, should I wait and come on the market in the prime spring market, or should I come on now? And my answer is, come on as soon as you can.
Right.
My sellers who came on last year came on in January, sold quickly at top price, and avoided all that competition. So if you are a seller, I would recommend preparing your home for sale first, of course, but coming on the market as soon as you can, selling at top price, and moving on with your plans. And then when the other competition comes on, you won't have to deal with that at all. And as far as buyers go, buyers in my office has been very busy in the first month of January. Now we're into the mid of January with a lot of accepted offers already. So if you are a buyer, you don't even have to wait until the next couple of months, although there will be more inventory coming on then, but you can just jump in right now, as Amy said, because the interest rates are very low, and that's going to drastically affect your monthly payment.
Exactly.
Right? So both buyers and sellers, I would highly recommend to jump into the market right now and avoid all the competition. And there will be more inventory coming on in the next couple of months, but there's still a good amount of homes on right now.
Yes, and what rates will be doing this year, and I don't have that crystal ball, but as in the past few years, we're always told that do something now because the rates are going to go up. Rates are going to go up. Rates are going to go up. And
Right.
we're hearing that in this coming year too. But we don't know. And if they do increase, it's going to be at a slow pace.
Right.
The housing market is recovering. As we know, the economy is recovering. So the government does not want to see that stall. So
Right.
we're keeping rates low. They're still putting money behind mortgage-backed securities, which was supposed to end in November, but there was no vote for that to happen. So we're still seeing these great rates, and hopefully they will last for a while. And if we do see an increase, I personally, and I said I don't have that crystal ball, Theresa, as I just, according to the past, I just don't see them going up drastically. It could go up an eighth, a quarter, whatever, but I don't see them going up that much, personally.
And that's excellent news for
Right. And it
both
should
sellers
be
and
hopeful.
buyers out there.
Right.
And obviously, sellers are going to want to attract those qualified buyers. So those rates being low, staying low, is going to affect, obviously, their monthly mortgage payment. The next thing I'd like to discuss is what is new in the mortgage industry today?
And as I mentioned to you and told the viewers, that things are loosening up in the industry. So we've got a couple of good things that have just recently happened. On FHA.
Yes.
FHA is, I always say, the go-to, the savior of a lot of people in order to get a mortgage loan, is they have reduced their monthly mortgage insurance, their monthly MI, from 1.35 to 0.85. This is significant.
Excellent.
So if you had, for example, if you had a loan for, say, $200,000, your mortgage insurance would be about $225 a month. And say you were doing that same loan today at 0.85, it'd be about $141 a month. So it's considerably lower.
It definitely is, yeah.
And people that even are going to refinance, that have just done a loan with a large monthly MI, should take advantage, and it's a combined advantage of a lower rate that's happening today and a
Right.
lower MI.
And just so the viewers know, and you know, Amy, many of my buyers for my listings and my buyers last year actually went FHA. And I don't know if the viewers are aware, but FHA, you only have to put 3.5% down.
Exactly.
Which is very, very popular right now with the buyers. So it's a great program. And why don't you explain to them I know many people might not know what FHA stands for.
Okay.
And that it's, why don't you explain, exactly
FHA has been around for a long time. I'm going to get into the programs. I have a number of programs that are out there for people to consider when they consider purchasing a house. But FHA, I've always said the quote unquote to the rescue. FHA allows a lower credit score, number one, a higher debt to income, which is important, than regular conforming loans. It's only 3.5% down. And the ratios can be higher, and also they're less restrictive. If people have certain problems in life, as we all come across, everybody wants to pay their bills, everybody wants to do the right thing, but sometimes we incur problems in life.
That's right.
And so they're less restrictive with all their regulations. So I always say, quote unquote, FHA to the rescue. So it's a great program.
It really is. I've heard very good things about it.
And then the new change to this year is a 3% program down from Fannie Mae. Fannie Mae, Freddie Mac has one. Fannie Mae is called My Community. Freddie Mac, I think it's Home Possible with Freddie Mac. And it's a 3% down program.
3%, okay.
And it's an excellent program. There are restrictions. So the benefits are as a low down payment and a lower mortgage insurance a month. Because whenever you're not putting down 20%, you're paying some type of mortgage insurance, whether it's in the rate, whether it's a monthly, whatever it is, you still have to make up that 20% for it to be 20%. So this is a program just brought out, My Community it's called, that has a lower MI, discounted mortgage insurance. And they also do refinances at 95%, but it's a 97% program, 3% down. So that is huge.
It is huge.
It's huge today, especially with everything loosening up a little bit.
Okay.
And the only thing, there is a cap for income.
There is a cap for
There is a
income.
cap for income, first-time home buyers, or if you haven't purchased a house in 3 years. So there is some capped based on the county that you're purchasing in, and counseling is required too. And it could be done in a webinar. It's relatively easy.
And as far as the county, if we could back up and talk about the county issue, if you could tell the viewers, for instance, if you live in Middlesex County versus Worcester County, what would be the difference?
Now, I don't know what Middlesex County is right now. I'm not sure of that. I know Worcester County is about 80,000.
80,000.
So it's kind of low.
Okay.
Middlesex is always higher.
Higher, yes.
So I would have
makes a
to
big
find out
it makes a
exactly,
difference,
what that amount is.
But
So
that's
there's
good
like-
for the viewers to at least investigate, because if they're purchasing a home in Middlesex County, they can purchase more mortgage than they can if they're purchasing over in the Worcester County. So that's something that the viewers would find very valuable, I think.
And if if your income is much higher than that, we have FHA. FHA does not have any income restrictions. There's many programs out there.
Oh, there are.
And
First-time buyers, too?
Yep, people don't understand how many programs are offered out there. And what I do is I look at a person's situation, I sit down with them and give them the options. Or what it comes down to, what program are you going to be paying less for a month? It's
Right,
how much
that's-
am I going to be paying for a month?
That
So
is
it's
so
whatever,
important.
that's the most important factor there. It's never mind what the program is or what the rate is sometimes. What it comes down to is how much am I going to pay a month?
That's a great point, Amy, because even when I speak with my buyers, I always explain to them, it's not the price of the property you should be so concerned about. It's the cost of that mortgage payment.
Exactly.
It's the cost that's really crucial versus the price of the property.
Yes.
So that's excellent information. And also, if you could just explain to the viewers, what do people have to do to prepare themselves to purchase a home nowadays?
And I say this all the time, credit is everything. And especially a lot of young people don't realize this,
That's true.
starting out. And I'm guilty of this. You go to a store, it's having too many credit cards. You go to any store today, purchase something, they ask you, do you have our company credit card? And you say no. Well, you can save 10, 15, 20% right now.
No, they say
And
that.
you're tempted to do that. But you have to remember that that is an inquiry on your credit. That's more of a debt on your credit. So you have to be careful of that when you're considering purchasing a home, is the amount of credit cards you have and the amount of debt you owe. And when I work with people, I sit down with people and their credit score is low or there is too much debt, I try to work out a plan with them to clear some things up, to help them put on a plan. So if the purchase is not now, it could be 6 months from now. What you want to do, especially with credit, to increase a credit score, is get that debt down for the amount that you owe compared to the high limit, for it to be right about 50%. So if you have a purchase of $300, if you have a credit limit of $300, you want to owe $150 or less. Because every time you're above that and you have X amount of credit cards, that hurts your credit, and your credit will rise with
And
that. Your
also-
credit will go down, I'm sorry.
And when Amy, just so you know, Amy is excellent with buyers, first-time buyers and other buyers as well, as far as sitting down with them right from the get-go and going over everything with, I mean, you have a lot of experience, and some buyers may not have ever met with a mortgage lender before, but I know that Amy sits down, takes the time, she's very meticulous, and she'll spend the time with the buyers that you need to do, because some of these buyers have never purchased a home before, and they need someone like you to guide them and just give them all the different options that they have. There's so many options.
People don't realize that, and a lot of people still think today, I have to have that 20% down. Or they're thinking, I have to have nothing down.
Right.
So
That's
it's
right.
so different. It's so different today, and I try to take everyone by the hand and walk through the process. Even if you've previously purchased, but you haven't purchased in a long time, things have changed.
Oh, definitely.
Things have changed, and
Definitely.
we need to provide more documentation. And it's today they look at a benefit to pay your mortgage. And the banks were all stuck years ago with people foreclosing on homes, walking out the door. So they're very cautious today.
And the credit rating, as far as the credit rating goes, Amy, I know, and for a fact, and if you could explain to the buyers too, it's not so much how much debt, although that's important. It's whether you make those payments on time every month that's crucial.
Exactly,
Right?
exactly. That is so important, is not to have a late payment.
Right.
And sometimes, we're all guilty of forgetting.
Right.
Forgetting, but if it goes over that 30 days, it's going to be a mark against your credit that you had a 30-day late.
Right.
And I see some credits that it's only a $15 payment or a $20 payment there. So to be conscious, especially when you're going to purchase a home, first-time buyers, to be conscious of those payments and to
making
do
them
them
on time.
on time. Yes.
And what is the difference between purchasing a single-family home versus purchasing a condo?
Oh, there's quite a bit of difference. From single-family home is a lot easier than purchasing a condo. And a lot of people says, "Oh, just go out and get a condo." And new condos are more difficult. New projects are more difficult than already existing projects. And with new projects, we need to know what phase it's in. Is the project complete? Is the association in place? Is the builder in there, still in there? Is the common areas completed? So there's a lot to consider on a new project.
Construction, okay.
And on a regular condo, how long the condo has been there? Is there any litigation against the condo?
That is huge.
That is huge.
Because they don't offer, well, you can explain as far as if they're pending any litigation that can affect the buyer getting a mortgage.
It can affect the association in their reserves. How much is in the reserve fund? Is there, okay, there's enough, we need to have the budget.
Right.
We need to have the budget. We send out a condo questionnaire to the association. They fill out the condo questionnaire, and a big factor too is how many rentals are there compared to owner occupied.
That's right. That's an
The
important.
banks have a problem with it being a certain percentage of rentals. They want to see a majority of owner occupied. So when you go to look at condos, you don't realize this. So you might make an offer, and I see this happening all the time, without getting that condo questionnaire filled out,
Right.
and you end up not being able to get a loan on that property because you see that, oh, it's a good deal, it's lower priced. So when a condo is lower priced, that is a magnet for investors to go in
That's
and
right.
purchase that condo, and then it becomes investor concentrated.
And many complexes also, some of them are not FHA approved. So it's
Right.
important to know that as well, right?
Also
Going
to
into
know
it.
that too, because
If
a lot of them today are not FHA
They're
approved,
not,
so you
yeah.
can't really do that wonderful 3.5% down.
Right, and that's
So
why
you just
it's good
have to be careful.
That's why it's good to sit down with you, who has a lot of experience, so that you know what kind of information to give buyers that are looking for a condo.
Right,
You know?
instead of going through the process and you have your heart set on that particular home and find out you can't get it.
Oh, that's
so
so
it's better to
disappointing.
get pre-approved first and go through the whole process and know what you're looking at.
So what current programs are being offered today? I know you've reviewed some of them.
Yes.
Are there any others that you can review with the viewers today?
Well, there's always conforming. Conforming's been out there, and I mentioned this before. The conforming was always, from years ago, that 20% down. So you have MI if you don't have that 20% down. And we do now have, with most investors, a 5% down program. And the 5% down, you can eliminate MI by increasing the rate, which I do like that. So say rates are at 4%. You could increase that rate to 4.5% and not have that mortgage insurance each month.
Oh, that's excellent.
So,
Yeah.
and there's different, or you can pay that up front. Sometimes we can finance it into the loan. So that program is very good for people, especially young people today. It's hard to have that more than that 5% down.
Oh, especially with all their college loans.
All the loans that they have too. So I don't say very many people starting out having 20% to put down.
Very few.
Very few
in fact,
has to have that.
Well, one of my buyers did have, and you might want to touch upon a cash buyer. Even if they are a cash buyer, they don't have to have a pre-approval, but they do have to have a proof of funds letter when you do place your offer and you're paying cash on a property. You do have to check in with your bank or your lender and make sure you have that proof of funds letter, or the seller
Exactly.
won't accept it.
Exactly, exactly, because sellers are very experienced today. They know what they're looking for. So it's very important to get a pre-approval letter, because if you're out there with your agent and you find that house that you've been looking for and you want to make an offer, They won't. The seller will not accept that offer without a qualified pre-approval letter,
And
which
that
we do
brings
at
me-
Drew
and that's-
Mortgage.
You do that, right? Okay.
Yes,
Excellent.
yes, we check everything before we send out at pre-approval. So we do not send you out looking for a home without knowing what you can do and what you're qualified for.
Now, is there a difference? You can also explain to everybody the difference between PreQual and pre-approval.
Well, sometimes a pre-qual letter is just not even looking at anything, just talking to somebody on
Over
the
the phone,
phone.
right.
And even if they do have some issues, just saying, we'll deal with them later. We don't do that. I don't do that, and Drew Mortgage does not do that.
It's always a true pre-approval.
It's true pre-approval, and if we do have to do a quick pre-approval, does this person have a solid income coming in?
Right.
Okay? I still always look at the credit. How is that credit?
The credit's
So you're
so
just
important.
making sure. You're just making sure for the agent's sake too.
And the credit, like Amy said, is so important because it will directly affect that rate. How well, and if you're out there and you have a lot of credit cards, as Amy mentioned, try to pay some of them off before you start that home search, because that's the first thing that's going to affect that credit, that interest rate every month on your mortgage is how well your credit is. If you have excellent credit, you're going to get the best rate.
Exactly. Exactly. You're going to get the best rate that's out there. It's not like, what's the rate today when we get phone calls in there? There's no such thing as what's the rate today.
No, and that's a good point.
It's how you qualify. What is your credit score?
Right.
What are you looking to do? Are you refinancing and taking money out? Are you just refinancing rate and term? Are you purchasing, and what program are you going on? And that determines, in your credit determines the rate that you're going to receive.
And Amy also mentioned, how important a pre-approval letter is. It is crucial when you write an offer, because nowadays, and with my listings too, we've had many multiple offer situations. Right. So if you, and I've had buyer agents send over an offer in a multiple offer situation without not a pre-approval letter attached to it. So that can directly affect whether you get that property or not, and it has to be an updated pre-approval. It can't be 6 months old. So a pre-approval letter, you need to, the first thing when you want to start your home search is meet with someone such as Amy, sit down, get your pre-approval up front before you even start your search, so that when you start looking at your homes, you'll have it right in hand, and if you find something and you fall in love with it immediately, you won't lose it because you don't have your pre-approval.
Exactly. That is so important. And so the other programs that we offer, we have mass housing.
You do. That was going to be
mass
my next
housing.
question. Mass housing is very
One
popular.
of the biggest benefits with the mass housing is 5% down on a two-family without MI.
Oh,
without MI.
okay.
So that's huge with mass housing.
And that's also based on the income as well.
Yes. Yes, that has income restrictions.
It
A lot
does.
of these programs that are out there usually have some restrictions. FHA, like going back to FHA, there's no income restrictions. And if you have a lower credit score, with FHA, you still get the same rate. With conforming loan, if you're going to do a conforming loan with 5% down, if you have a lower credit score, that is definitely going to affect the rate.
So that's very important for them.
So
viewers to
FHA
know.
has a lot to offer
Definitely.
people today still. And then we have VA.
I was just going to ask you about VA.
VA, 100% financing for those great veterans
Awesome.
out there.
And they deserve that.
They
They're
deserve
so
that.
deserving of that.
Exactly. And there's also discounts for if you're a disabled veteran. There's discounted programs for them too.
Now the VA loan, and I've had buyers also approach my, purchase my properties with VA. If you could just explain, they have a lot more restrictions, correct?
They have some restrictions. They're there. The VA loan is there to help the veteran. It
Right.
really does. You need to have your certificate, which we can get your eligibility certificate. Which, if you don't have it readily available, I can pull it online.
Oh, that's
And they do have. They look at. Whereas other loans don't. They look at what the electricity bill would be a month. They look at certain cost, the cost
okay.
of your home, besides just having your mortgage and your taxes being paid. They look at that. And one thing also with VA I do want to mention, if you're with your partner for a number of years and you're not married and you're hoping to use your partner's salary on the loan, cannot. You have to be married to the spouse.
And what
Yes.
about alimony payments? How does that affect a pre-approval?
Alimony payments, it depends upon, well, if it's alimony and there's no date on when that alimony, we always look for a divorce decree. We always look for a divorce decree. The same thing with child support. How long is that child support going to last?
Okay, but it is obviously considered income.
Yes,
So
that's
important
considered.
for people to know, because they
Yes.
might, they might not know a lot of information about that.
Right. And then we do have USDA.
USDA.
Rural areas, 100% financing. There are income caps to that also. This was the old farmer's loan to help out towns, rural towns that had 20,000 people or less years ago. So that's what started the USDA. But there's some restrictions for that.
Now, is that very popular right now, Amy? The
It is
USDA?
in the rural areas.
The rural areas, okay.
It still is, and for the people that don't really have much money down. But they have to realize they are living further than probably they've got that to travel with their jobs, because they're
right.
moving out further out too. But they have that 100% financing is to help out the towns and the individual too.
Okay.
And then we have 203Ks,
203Ks, that's right. Yep.
fixer-upper home.
Yep.
Quote unquote fixer-upper. There's 2 programs with that. There's a streamline. If there is renovations under $35,000, that is not structural. Not structural. Putting in a kitchen, a bathroom, Title V, replacing.
Right.
That is considered not structural, so that can be done. And then there's the structural one, over 35, that it's a full review. It's a full review, but we also have that too.
You offer quite a few programs.
Quite a few
You really do.
programs, along with commercial too.
Now,
we do commercial.
why don't you explain also how, if someone wants to reach out to you, where would you meet them, if you want to give them your contact information right now?
Yes. I can be reached on my cell or my direct line at Drew Mortgage. My direct line is 508-421-8166. My cell number is 508-353-9611. I'm glad to meet you wherever it's convenient for you. I do like to meet people to discuss. We can have a start a conversation to begin with on the phone, but I do like to meet with people. I feel like it's a
face-to-face.
handheld process. It's the most biggest expense of
It
your
really
life
is.
at this time.
It is.
So it's important.
And
It is.
It's important, like you say, to have a face-to-face with people, and I appreciate you coming on the show today.
Thank you
and-
for having me. I
and all of
appreciate being here.
Everything's been so valuable information that I'm sure many of you out there are going to be starting your searches, either bringing your homes on the market and looking for qualified buyers, or starting your own home searches soon. So if you are, you're welcome to reach out to Amy. Her information will be listed on the show as well at the end of the show. And also, if you have any questions at all about either bringing your home on the market or preparing your home for sale, you're welcome to reach out to me as well. I'd be happy to meet with you. Many of my listings have been staged. I think staged homes are the ones nowadays
Yes.
that sell the fastest and at the highest price. So if you are interested in any tips at all on staging, I could help you out with that. This is our prime spring market that we're coming into in the next couple of months. It actually starts at the end of February in this area. So this is the prime time to bring your home on the market and to sell at top price. So if you do have any questions, I want to thank everybody for tuning in today, and I want to thank you.
Thank
so
you.
Awesome having you with me.
Okay, thank you so
very
much. Thank you.
Thanks for tuning in today. And I'll see you next month. We'll have another. I'll have another guest in the real estate industry coming on the show in February. So until then, thanks for tuning in.
Thank you.